Well, happy Friday to you. Well, we almost made it to the end of the work week. I'm Marlon Bowling with you, your tour guide to the ag commodities. We are thrilled to talk with you about our ag commodity trade, and I want to welcome aboard our guest analyst, Brian Hoops. Brian happens to be the president of a company called Midwest Market Solutions. They have locations all over the Western Corn Belt, and Brian, always good to visit with you about the market activity. During the break here, right before we came on live, I made the comment that, I left home this morning to come to work and glanced at the markets, and corn was 7 higher. When I got out of the vehicle and walked into the studios here, the corn was 8 lower. What happened while I was on the road this morning?
Yeah, you have to take this news for what you think it's worth. The market thought enough of Vladimir Putin's comments that it sold off. He says there's progress being made on a ceasefire agreement. So, like I said, take that for what it's worth. I don't know that that's going to be the case, but the market did pull back off of it. It's kind of similar to what we saw last Friday, where we made new contract highs in the May corn overnight and then started to sell off a little bit during the day session. We were higher overnight, sold off into the morning hours. So, any little news like this, whether there's talks about a ceasefire, increase in the fighting, it's going to move the market one way or the other. And there wasn't a lot of news on Friday mornings to talk about anyway. There was a private export sale announcement this morning: corn to an unknown destination, soybeans to China. That should prove to be supportive for the marketplace, but overriding that, I think, is going to be what the market perceives as happening overseas. If we are in a position where we're going to increase exports, we'll rally. If it looks like we're in a position where maybe our export window has come and gone or starting to close, we'll pull back here on these price levels, just based off of that fundamental information.
So looking at the overnight export sales here, we had soybeans to China, 264,000 tons. What caught my attention was that they almost always buy in amounts of 132,000 tons. You do the math, this is exactly double that. So that's kind of interesting here. It is for deferred delivery, though, for next year's new crop. Also on that corn, 128,900 tons. Now that was for unknown destinations. But when it's a somewhat odd amount like that, that usually indicates that's not China, doesn't it?
Yeah, you're absolutely right, Marlon. That it's probably not going to end up being China. Most likely it's Mexico. They seem to buy in a little bit odd figures like that, when it's not in a combination of one cargo. So most likely that could be Mexico, but trade never rules out that it may end up being China. But overall, it's going to be a supportive number as it takes bushels off of our balance sheets, and then to fill that void, you need to plant more acres. We've seen a pretty good move in corn and soybeans, new crop of corn and soybeans yesterday, poking its head above resistance into new high territory based off of supply and demand numbers earlier this week that suggested our balance sheets are tightening and we need to fill that void or that hole by planting more acres and rebuilding that cushion.
So everything overnight was weaker. Let's take a look here at our quotes provided by Bar Chart here this morning. On the corn trade, we had the May contract 7.5 lower at 748.25 as we ramped up the Globex trade here. It had been as high as 764.5. So extreme choppiness rather remains in this market here. So we had a trading range about 18 cents wide. It has been a lot wider than that in previous days. December corn, the new crop contract, down 7.5 cents at 644.25. Now, visiting the soybean trade, well, we had the May contract down 16.25 cents, and we finished up the overnight session at 16.70, and that was almost 16 cents off of our overnight high, within a nickel of our low of that trade. We had the new crop November soybeans dropping by 15 cents overnight. They were priced at 14.77.25. Now, checking in on the wheat market, did it regroup overnight? Not really. You had May Chicago wheat going down another 25.5 cents at 1061.5 after a high of 1126.25. So the volatility remains, that's for sure. In the wheat trade, it looks like we had roughly a 75-cent trading range in that Chicago wheat overnight. Now, on the Kansas City market, you had the May down 9.5 cents at 1056.25. Of course, they were talking about some moisture in the plains, and it looks like it was probably pretty light for the most part. May spring wheat, 5 3/4 lower at 10.49 1/4. We'll pause here. We'll come back and talk livestock. We had a little bit of cash cattle trade activity yesterday. We'll discuss what the future may hold for today when we come back. Well, let's talk a little livestock trade here with Brian Hoops of Midwest Market Solutions. On the live cattle board here, Brian, yesterday when we finished up, we had the April live cattle down $1.67. We finished at 135.90, and that was significantly off of its high of yesterday's trade, that's for sure. The nearbys had the most weakness. On the feeder cattle trade, wow, you had some significant drops. April was down $3.90 on the close yesterday at 156.25. And look at that May contract, 412 to the downside. It finished at 161.80. Why so much weakness on the intermediate contracts and the deferred contracts in the feeders?
That market was really impacted by the corn market rally. And, when feeder cattle closed, corn was well over 20 cents a bushel higher, and it had pressured the cattle all throughout the trading session. In fact, we were over 30 cents at one point and kind of pulled back into the end of the day. So feeder cattle could get a little bit of a bounce on the opening this morning with corn turning lower now in the overnight. I wouldn't be surprised to see that. We've seen cash cattle trade pretty much wrap up for the week at $2 to $4 softer on a dress basis and a couple dollars lower on a live basis. Next week's cash trade could be a little bit firmer, I think, with the weekly kill rates coming in much above last year. Those are really strong numbers. Plus, you had steer weights coming down about 3 pounds compared to the previous week. If we can continue that trend, we can cut into that difference between last year's weights and this year's, which we're about 19 pounds heavier. So that's a big disparity. We need to trim that down to see the cash markets firm up. But going into the end of the month, we would expect to see the cash market start to improve in here. And with the stock market being higher, maybe we can get the cattle market to see a little short covering into the weekend.
Yeah, looking at the charts on live cattle and on feeder cattle, I mean, they both look like they need a life preserver at this point. Could it come in the fact that maybe they're just so oversold that some traders look at that and think, well, there's a value there?
Yeah, absolutely. The cutout values are trying to bottom, and they were higher overnight. So there's some value in these cattle contracts, I think, at these price levels. April closed right below that 136 area. Cash this week is 138. So that does seem undervalued given the current cash. If we can see signs that cash stabilizes or even starts to work higher, April is going to be considered undervalued and we'll have to rally. And that could come, maybe today, but probably early next week when we get more assessment of the show list numbers. But upside probably limited with this economy struggling, inflationary cost on the rise. It's going to be tough go for the cattle market until we relieve some of that pressure.
Looking at how we finished in the lean hogs yesterday, well, here you go. We were down on the nearby contracts with April down $1 and a nickel at $100 and a dime. The May down just one tick. And then you had the deferreds actually higher. July up $1.05 on the close yesterday. A little bit of spread trading there, do you think? Brian, thanks for talking with us. I appreciate the help and have a good weekend out there.
You too.
Appreciate that. Brian Hoops of Midwest Market Solutions.